All right, welcome everybody. It's Doug here with the LincolnList.com. This is a stock market weekly review for the 29th of February. Already just like that. 2 months down the year. 2 months gone already just like that. Seems like just yesterday. There it was, the beginning of the year. I hope whatever goals that you had set for yourself and the plans that you had set for yourself, you're on target. If you're not and you're struggling with this trading, you're unable to execute, you're premature on your exits, you're taking losses too soon, and you're just messing this whole thing up. One of the reasons people struggle is more to do with self-sabotage than actually the process themselves. I mean, everybody has a process, but then executing that process is something completely different. If you're one of those traders that's in that phase where you're struggling to execute your game plan, visit thelincolnlist.com, take a 14-day free trial, see all the trades in real time live on screen. Only 2 losing sessions this whole year, so regardless of what the market does, there's always opportunity, and we're going to talk about that right now. So if you're looking to go to the next level, visit thelincolnlist.com, take a 14-day free trial. Now we're like in market melt-up week number 2, which I got to be honest with you, it's totally annoying. I can't stand it. For some reason, they just wear me out, and personally, it's just annoying. I mean, yeah, you can still make money in the market, but for some reason, it's just not as fun. And just seeing a melt-up market just always kind of puts me in a grumpster mood. And we've been that way since this double bottom bounce here off of 181. And I kind of expected us, if we pick up where we left off last week, I should say. I thought when we get into this 195, we needed some digestion. We got a little bit of a pullback there on Wednesday, but about just mid-morning there, the SPY just turns around and just starts grinding, just melting up, and it's like everybody was underneath of every single red bar, just buying it. It's like they wouldn't even let this thing drift a few pennies. It felt like and that's just disgusting sometimes because you want the volatility, but that's the way it goes. Now we kind of broke out there early Friday, kind of gapped up above that 50 moving average to 197, and then just drifted a little bit. So the way this thing handles this whole 50 moving average throughout the week will kind of let it lead us to some more clues. I think if we hold this level, or we don't really drift too far underneath this 192.38, which is the 10 moving average on the daily chart, I'm just using that as a guide. I think if you stay above that, or you get some interest in that area, if it happens to drift there, I could see a move by the end of the week making it into 200. You had something very similar here where it kind of drifted right into this previous level of very, very short-term support of 190, and it just kind of, as like I said, mid-morning there, just rocketed right off. Not rocketed. It just started like trickling up nice and slow and boring, whatever. You might like that. I can't stand it, but doesn't really matter what I think, right? So let's watch this 50 moving average. Just 194 is pretty important. 192. I think if you see those hold, we might see a run into 200. Now this has created again another some great opportunities. But I'll tell you what we're seeing here more than rather than just say, this stock is setting up well or this stock is setting up well. You're seeing something happen every single day in this market from our view when we're looking to short these para moves. Every day you're getting, like a 20% mover. And I kind of brought this up about a week ago. Even when the market was super bullish in 13 and 14, you had a lot of stocks that went up. But, 20%ers, I'm not talking about penny stocks and micro caps. They go 20% all the time. But, stocks $20, $30, you had a few here. But this is like an everyday occurrence where you're getting a 20% mover and you're still getting people buying it right out of the open and buying like I said, the first little 1 or 2 small pullbacks of a stock that's already up 25-30%. Kind of started with CRTO a few weeks ago. And they're just not letting these things pull at all, regardless of how overbought. So that kind of melt up mentality. It's like everybody, 2 to 3 weeks ago, nobody wanted stocks. The world was going to end. And now everybody's all happy again, buying stocks at whatever price. It's crazy. So we got this ZOES. Here's another good example. It just gaps up on earnings, and I can get the earnings gap. When you get around 15%, and then it just starts just ripping all day, just ripping. Not really breaking any sort of intraday trend. For me, my stance on this is if you're shorting like this and you're using a contrarian strategy, which is my favorite strategy, is shorting these explosive, parabolic, unsustainable, euphoric moves. You've got to get it. You can't just short something because the sheer fact that it's up, because we're seeing them go up flag and then go up even more, and it just keeps doing that all day, like a BDC or something. They just don't let go. And this was kind of one of those. This is really your only shorts when you get this ramp up where you start getting some good para movement, and those are your only pullbacks. You'll kind of go para, pull back into a short-term moving average, hold, then go para again, pull back. It just keeps doing this over and over again. Point is this: you got to be looking at stocks that explode really far away from short-term intraday moving averages, have really high RSI readings, and put that whole combination together. Otherwise, you're just going to get stuck, trailing the stock the whole day. I got this one up here because it's a big move anyway. You got 19% on the day, closing strong. You're pretty close to some resistance at like 38. I think if there's some way, this thing explodes back into that, it's a short. Now, I've brought these kind of trades up before, and as I said, one of the issues we're having is you're not getting the explosive move on day 2. You're just getting the melt-up move. Like, it'll just keep going and keep going for the whole day. Like a good example, let me show you a good example. TMH is a pretty good example. Not TNH. TMH. You're not getting, like a lot of times you would get day 2, but here's a good example. You get this big old para. You've got all the high RSI readings. You got everything that you need. It doesn't drift very much. It just kind of moves right into the 10 moving average. Holds that all day. And then you get this like teeny weeny little itsy bitsy, whatever you want to call this, a pullback. I don't even want to disgrace the name of a pullback. And then it just kind of floats back up the next day, rather than getting any kind of flush in it. So you're kind of missing that overall flush. And it's just not with this one. You see a lot of them like that. So kind of going into these day 2 moves, I'm wondering, you're hitting these better off of like day 1 rather than day 2, because day 2 is not giving you the second para. Here's another one, and I'm kind of looking at this one because this thing must have 400 green days in a row. That's exaggeration, of course, but man, this thing it's just busting it out from 33 to 44. All greens here, and then as soon as earnings, this gets launched, same thing, just float, 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 float. I'm only interested if there's some way these go para. I'm not sure it would do that at this point. Just going to melt like this, and then maybe you'll get a couple of ramps in intraday where it can kind of rip. But we are close to some resistance here. I mean, just in case it opens up to 47, this is something I would be interested. As I said, I got a feeling that they're not going to do that. They're just going to sit there and take their time. And there's going to be other stocks that come open on a Monday that you'll say, oh, look, this thing went para off of earnings, or this thing's got some news. It's going. That's going to take your attention over some of these other ones with the watch list. Again, I don't know how much these things will actually move. Same way with WYNN. Where's WYNN here on mine? This thing is another couple of thousand. It seems like an eon of a century has passed since WYNN has had a red day. I mean, it's another one. And what I mean solely by this is, look at these wicks, not little wicks. Look at these wicks on this daily chart, and here and here and here. I mean, they're just everywhere, and that's just an indication of how many people are just scooping up anything that's a dip. Like these stocks will not. I mean, again, this could change at any time. Any time this can change, because like I said, 2 weeks ago the world was going to end. Now it's a completely different story. So maybe the world will start to end again this week. I don't know, but you can see how aggressive these dips have been this whole way through, and that's the beauty about stock market trading. When you're thinking overall yourself as a trader, nobody wants to buy stocks when the market's on sale, when it's going down, when there's doom and gloom in the air, right? 2 weeks ago, nobody wants to buy stocks. Nobody wants WYNN when it's down here at $57, or even a few weeks ago at the beginning of the year when it was flushing out at 52. Nobody was there for poor old WYNN saying, "Oh, I believe in you, buddy. I believe in you." But you're going to find a ton of people chasing this thing at 82, right? Welcome to the stock market, man. That's just how it works. So, just in the sheer fact, as I'm saying this, in a month from 52 to 82, come on, man. I mean, at some point, as they say, the market will rise prices until they become unattractive. I think you're starting to see some very unattractive valuations here of pricing. So again, I'm just looking for WYNN here. I think if you get any kind of strong move or any kind of move paras, I'm looking for paras or strength here, like you had Friday here where you got something, not this garbage right down in here like on Thursday. This is just junk. I don't want to be a part of that. I'm only looking for the big old Paris. So let's look at that. I think I'm done talking right now anyway. So again, if you're looking for, don't let my grumpiness fool you. You know, the market, that's one of the things you're going to learn as a trader. It's just, you don't fall in love with any of this stuff. It is what it is. If you're looking to go to that next level, because really your job is just to trade what the market gives you. You're not going to make any change in it. There's nothing that you're going to do that's going to change the course of a stock. You don't have that kind of money to actually manipulate the thing yourself. So you're just in it for the ride. You're just reading yourself, your charts, you got your hunches, your gut feelings, your fundamental analysis, whatever you're using to make a decision. Because that's your idea. You have that idea, you make your decision, and then the second part of this is you have to be able to execute it, and then you have to manage that decision once you're in it, because the factors that got you into it often change. All of this has to be done correctly for you to be successful and make money. You're just sitting back there waiting for the market to do something, and then you react. That's all we ever do. We don't control it. So if you're looking to go to another level, as I said in the beginning, visit thelincolnlist.com. Take a 14-day free trial. Other than that, I'll talk to everybody again next week on this weekly review. We'll see how the market works. I hope you finish off February nice and strong. As always, if you just need my help in general, reach out to me, service@thelincolnlist.com. Take care of yourself. I'll talk to you soon.